I'll show you exactly how to trade on Kraken, including all of the order types, how to navigate the trade screen, and everything else you need to know. So if you are using Kraken, I highly recommend trading on Kraken Pro because the trading fees are cheaper. So definitely do that. In the top right-hand corner of your screen, if you go to Kraken Pro here, just go over to this. You'll have all of the same assets and your portfolio value will be the same. You can just trade on here for lower trading fees. So once you've clicked Kraken Pro, what we can do is go to the trade screen here on the left, and then we can go ahead and trade. Now, if you're using the application as well, Kraken and Kraken Pro are actually different applications, but you log in with your same user account, and then you can go ahead and use Kraken Pro for those cheaper trading fees. I'll also leave timestamps down in the description of this video of all of the different sections if you want to skip around. I'll leave a link to Kraken if you don't have an account yet, and some of the other exchanges I use. You can get some deposit and trading bonuses if you're going ahead and trading crypto anyway. But from here, what we're going to do is figure out currency pairs and how to choose them. So if you're using Kraken already and you've deposited some money in, you can go ahead and swap that for a different cryptocurrency. Now, if you're looking for a beginner's guide for Kraken, I'll leave that down below as well, which shows you how to get money in and out of the platform and everything else. But if you have assets deposited onto the platform, what you can do is trade them for a crypto here. So in the top left of Kraken Pro, you see here it says BTC USDT. This is the current trading pair that we're looking at. So Bitcoin against USDT, which is a US dollar stablecoin. Click this. And then from here, you can choose all of your currency trading pairs. So if you've deposited some fiat currency onto Kraken, you can easily switch that for the crypto that you want to buy. Up in the top right of this dropdown, you can see quote here. If you click that, it's going to give you all of the different quote currencies. So what we're going to do is, let's say we choose euros. These are all the trading pairs against euros, right? So if you deposited euros onto the platform, you're going to swap that into the crypto that you want. Here's the Bitcoin Euro trading pair, ETH Euro, XRP Euro, and so on. If you've got dollars, just find the dollar trading pairs, which is this one, and you'll see these are all dollar trading pairs now. So Bitcoin against USD. Now those fiat currencies are different to stable coins. So for example, I can choose USDT down here, and this is a US dollar stable coin, not the US dollar fiat currency. So whatever you have on the platform, you'll know what you have, and you can find the trading pair against the currency that you have because you have that value and you want to swap it into something else. So I'm going to choose Bitcoin USDT, and this is showing me the exchange rate between Bitcoin and USDT, the US dollar stablecoin. I'll quickly explain what we're looking at here on the trading screen. So on the left-hand side, this is where we enter our order details so we can tell the system how we want to trade, how much we want to trade, and the price we want to trade at. And then you can buy or sell and enter your order, and that goes into the market. On the right-hand side here, this is the order book. This is everyone's orders, and these people are showing their orders to the market. Down here, these are buyers, and you can see their prices start at the highest bid, and then they go down in price down here. So these are all showing their orders to the market. On the left is the price, and then that's the amount of Bitcoin they're willing to buy at that price. So we can join these as well if we're looking to buy. These are sellers up at the top. This is the cheapest seller down here, and then the sellers obviously get more expensive. The price gets more expensive as you move up, and that's the amount that they've got on offer. You can see the difference between the best bid and the cheapest offer is 0.1, which is 10 cents. Right, so 98,830.1, which is 10 cents. So that's the spread between the highest bid and the cheapest offer. Now, when someone wants to take one of these, right, then that's when a trade happens, and they will take these prices here. And we can join this order book, or we can take other people's orders from this if we're willing to match their price. On the right-hand side, this is simply just a chart of the exchange rate of the currency pair that we're looking at, which is Bitcoin USDT in this instance. What we can also do is change the time frame. So I'll click this one, run the 1 day chart. Let's go to a 1 week chart. And what you see here is that each of these candles is actually 1 week in length now. So each candle is telling us the price action over a time frame, which we just changed it to the weekly chart. So what we have here is a candlestick showing that there's an opening price, and then this actually moved up, so it's a green candle. That's the closing price. That shows that in that week, we started at 85,000 and closed at 93,000. You can see in this week here, this is a red candle. This is where it opened at 94,000. The price moved down to around 80,000 at the end of that week. And so that's a red candle down, green candle up. The body of the candle is the open and the close. And then during that time frame, the week, you get these wicks here. That's where the price moves to in the week. But the open and the close create the body of the candle, and if the close is higher, that's green. If the close is lower, that's red. For us, for this video, we don't need to worry too much about that. Now, if you want to know more about trading and technical analysis, I'll leave the link down below to the Crypto Investor course. You can see here's about 300 videos here on getting yourself set up with an investment portfolio, how to invest, how to trade. I was a stockbroker and an investment manager, so I just put all my knowledge into getting set up in crypto and investing in general. You can check it out via the link below. I also update this for free over time for existing users. You can see all of these updates that I've made every few months. I update it with my analysis and my portfolio and holdings. You can check it out by the link below if you're interested. Something important to know about trading on Kraken is that you do get cheaper trading fees if you use an order type known as a maker order. Now, maker orders, we can trade when we use limit orders. And if you don't know what those two are, I'll explain them in the next section when we're looking at order types. But you can see the difference between trading fees. If you use maker orders, you get 25 basis points fees. If you use taker type orders, you're paying 40 basis points. It's not a massive amount, but if you're trading over time, you can save money just by using maker orders. So I highly suggest using these. You get cheaper trading fees. What exactly are maker taker orders then, and how do we get those cheaper fees? Well, a maker order is where we put our order onto the order book and show it to everyone before it gets traded. We can do that and we get those cheaper fees. Now, if we want to trade immediately and take someone else's order off the book, that is their price and size, if we take that out of the book, then we pay those higher fees. So how do we actually go ahead and enter maker orders where we show our order first? Well, we can do that up here where we use either limit or market orders. If you use a market order, you do not choose the price that you pay. You just choose the amount that you trade and you take someone else's order off the book. So let's say I want to trade $12. I'm going to buy BTC and I'm going to spend USDT. Notice with a market order, I cannot choose the price. That's because I'm telling the system, trade immediately right now and take the best trade for me right now. Now I'm going to go here, because I'm a buyer, I'm going to take this guy's order. He's the cheapest seller and I'm going to take that off the order book and trade immediately. And so I'm a taker of liquidity. I'm taking his liquidity out of the book. And so I'm going to pay those higher fees. So let's go ahead and do this. I'm just going to buy this amount. I cannot choose a price that I pay. It's going to check if I want to do it. Press confirm. That will trade immediately. You can see down here, right here, it says order submitted and traded immediately. So I took their order off the book and I paid those higher trading fees. Another way to trade though is with limit orders. And with a limit order, we show our order on the book first. And if we trade, that means someone else takes our order. They're a taker and we're a maker of that liquidity. We get those cheaper trading fees. So we're going to go up to limit order. So choose this, limit. Now we can choose the price that we pay. So how do we enter a limit order? And how do we show it on the book first before trading? We have to enter an order that comes onto the book. And that means that our order, our price, has to be below the mid price, right? Because if we enter a limit order, and let's say my limit price is 100,000 and I'm going to buy some BTC. What I'm telling the system is buy immediately right now, as long as the price is better than my limit price. My limit price is 100,000. Another one, 100,000. And that means that I'm going to trade immediately because the actual price in the market is 98,800. So I'm going to trade immediately. My limit price is 100,000. This is not a maker order. I'm actually still going to take someone's order off the book because I'm going to trade immediately. I'm going to take this one here. So I'm still not a maker of liquidity. I'll take their order. So what I need to do to actually enter a limit order and have it onto the book is choose a price that is below the mid price so it can't trade straight away. So let's say 98,800 like this. So 98,800 is below the mid price. We cannot trade straight away because now I'm telling the system trade immediately as long as the price is 98,800 or lower, and it isn't right now. So what we're going to do is actually go onto the book. I'm going to change this to 98,700. We'll choose an amount to trade. I'm going to press buy BTC, confirm again. You'll notice though that actually my order has been submitted, but my order now is in open orders. The reason why it's open is because it hasn't traded yet. The price in the market is 98,800. My limit price that I'm willing to trade at is 98,700. My order is now on the book, creating liquidity. I now have to wait for someone else to trade with me, and that means that the market price has to come down to my limit, 98,700. If I trade, then I buy the Bitcoin at that price and I pay the lower trading fees because I made the liquidity and someone else took it. Using a limit order like this then makes us wait to trade, and we may not trade because the price may not come down to the price that we want to trade at. If you go to the right hand side, you can see the edit button here. So I'm going to click edit, and then you can see you can edit your order details. So 98,700 may be a little bit low. Let's go to 98,800 and we have a higher chance of getting the trade done. I can choose the amount I can trade, so I can edit that here as well if I want to change it around. But I'm going to confirm the edits like this, press confirm. I've moved my bid up, but it's still too low for the current market, although it has a higher chance of getting done. Now, if you want to cancel this out as well, just go to the right, press this one. Do you want to cancel? Yes, cancel order. So we haven't traded, we entered an order, it didn't get filled, and then we cancelled it out. You don't pay any trading fees for that. You only pay trading fees when you actually exchange assets. Even if you enter a limit order and you want to go onto the book as a maker of liquidity, it depends on your limit price. Like I said, if I was a buyer at 100,000, even though I'm entering a limit order, this will trade immediately because my limit price is much higher than the price at which I can trade. And therefore I trade immediately. I'm going to pay those taker trading fees, and I'm basically doing exactly the same thing as entering a market order. Now, if you want to use limit orders that are quite close to the price, and you're worried about just trading a market order, right, and paying those higher fees, what you can do is use this post only tick box right here. What this does is prevent us entering taker orders and prevent us trading immediately. For example, if I enter a buy order at 100,000, and I'm using a limit, so I don't want to trade immediately. I want my order to go on the book. Basically, I've made a mistake, right? I said that my limit is 100,000 and it's going to trade immediately, and that's not what I want to do. I've made a mistake. Well, post only prevents that mistake, and it will prevent you entering an order that can trade immediately. This is a good insurance policy if you don't want to pay those slightly higher trading fees. So I'm going to press 100,000 here, buy this amount. I'm going to buy BTC. It says, hey, do you want to enter this order? I'm going to press confirm. However, you should be able to see down here that the order was cancelled. The reason being is that I pressed post only, which means that if the order can trade straight away, it will reject. And that's because I want to use a limit order and I don't want to trade straight away. So this is great insurance if you're putting orders in close to the price, but you don't want to trade straight away. That's going to help you do that. We can also use the stop loss order type on Kraken. This lets us actually sell positions at a loss to prevent further losses. Now, for investors and slightly longer term traders, especially if you're just trading in the cash market, right, and buying and holding the assets, stop losses aren't very common to be used. However, if you're trading shorter term, you may want to use a stop loss. A stop loss is where we get into the trade at a certain level. So let's say right here, I get in at 98,000, right? So this price right here, that's the price that we're getting in at, right? So this price right here. Now, I want to trade short term, and I think that we're going to go up to pretty much the highs here, and I just want to trade short term, so I think I'm going to sell out right here. However, this is a short term trade, and I don't want the money tied up for a long time, and so if I trade wrong, right, so I get the trade wrong and the price starts moving down, I want to get out of the trade at this loss right here. So I want to get in, I hope the price goes up to here where I can sell, but if the price comes down, I just want to get out at a small loss to prevent further losses if the price moves further down, right? So we can use an order type known as stop loss. So up at the top, click this, and then stop loss or stop loss limit. So click that. The reason why we need to use this special order type is because if we enter a sell order with a limit price below the current price, then we'd trade straight away. So limit orders trade immediately if they can. So the current price is 98,000. If I enter a sell order here and say that my limit price is 96,000, it's going to trade immediately for me, right? Because I'm saying sell immediately as long as the price is 96,000 or higher, and it is, it's 98,000, right? So it's going to sell immediately for me. That's not what I want to do. I actually want to wait for the price to come down if it does, and then sell later at a loss. So what we're going to do is press stop. This enters the trigger price right here. Now the trigger is a price where your order actually is entered, right? So we're not entering our order immediately. We're entering our sell order only if we get triggered at a certain price. This lets us wait to actually sell at a loss without selling immediately with limit order or market order. So now we have the trigger order, and I'm going to say my trigger order is here at, let's say, 93,000. You can see it tells me that if you sold, so if you buy now at 98 and then sell at 93, that is a 6% loss that you'd be taking. And then I can choose the amount of Bitcoin that I can sell at that point, right? So $13 worth, whatever it is. And then you can enter that order. So what I'm going to do is enter this order. It's a stop loss. The trigger price is 93,000, which is a 6% loss. So I'm going to sell, confirm, like this. And if we see, it's now in conditional orders. If I entered a limit order at that price to sell, and the limit price was 93, I would have sold immediately. That's not what I want to do. I want to wait until 93 and then sell at a loss. And so that's the trigger price here, and this is waiting to trade. If the price moves to 93, only then will this order trigger and enter the sell order at 93, and then I'll sell my Bitcoin in this case. And that is a stop loss. So you actually sell for a loss to prevent further losses. If you want to edit that as well, you can do. So you can see here on the right hand side, we can cancel it out. We haven't traded because that order was waiting and it didn't trigger. We can also use this exact same order type to the upside as well to take profits. So if you've got your entry price at 98,000, you hope to sell at 108,000 or 110,000, you can put a take profit in like this, and you can see the trigger is the same. So let's say 110,000 is my trigger. It's going to wait until 110,000. That's the trigger that enters the sell order, and you can sell right here. Now, you can do that, or you can actually just use a limit order in this case, because the limit, we can put the limit price at 110, and that means that we sell at 110 or better if it's higher than that, right? So you can use a limit order in that case. That's why stop orders, or trigger orders as they're known, really are for stop losses and not for profits, because if you're taking a profit, you can just use a limit order. I'll also show you how to trade in the futures market on Kraken, which is for much shorter term trading, more speculation, or if you have a larger portfolio, you can use futures to hedge some prices of the assets that you own. So up in the top, we can click the currency trading pair here and then go over to futures, and we can see all of the trading pairs for futures. So I'll explain what futures are. We'll choose the Bitcoin perpetual future to trade. What futures are is a synthetic contract that we can trade. And we're not buying and selling the crypto itself. We are simply trading the price. And so we can trade the price long, which is like buying, so you benefit from the price going up. But you can also trade the price short, which is benefiting from the price going down, which is like selling. But we're not buying and selling because we're not actually trading the crypto. We're just taking a trading position based on the price. So if we're long, we benefit from prices rising, and if we're short, we benefit from prices going down. And the reason why we want to do this is either speculating on the price, which a lot of people do. The other though is if you have a large portfolio and you want to trade around the edges of it, maybe hedge some price exposure, then you can do that with the assets that you put on Kraken. The way we trade on futures is that you don't actually cash settle the trades that you're making. You put an amount of crypto or an asset in your futures trading account to trade with, and the dollar value of that is used as collateral to fund your trades. And that's why you can take leverage. So let's say you have 1,000 USDT in your account to trade with. Well, Kraken will let you trade with a multiple of that, 2, 3, 4 times leverage. So let's say using 5 times leverage, you can enter a trade with the market worth $5,000, even though you have $1,000 on your account, or USDT. The reason why they let you do that is because you only have to fund potential losses of your trades, right? So if you're using 5 times leverage, then you open a $5,000 position, you've got $1,000 to pay for potential losses in that trade. So $5,000 trade, if the thing goes down 20%, that's $1,000, and your $1,000 is wiped out and you lost that trade. On the other side, if you make a $5,000 trade and it goes up 20%, that's $1,000, and you've doubled your asset that you had as collateral, but you've made a 20% gain on the $5,000 trade. The reason why you can trade with leverage is because you have assets there to pay for any potential losses. So it's a little bit different to the spot market, where you have to trade with the amount of money that you have, and you can only cash settle your trade. In order to get assets into your futures trading account, go up to the top left of the order entry screen here and press this plus button. You'll see that there's a spot trading account, which is where your assets are held, and you own those, and you can withdraw them from the platform if you want. But if you want to trade in futures, it's a different account. And that's so that we can firewall the different assets that we have. Because in futures, price can move a lot, and you want to collateralize your future trades with some assets, but you don't want to use all of your assets. If you have assets in your spot trading account, then they're safe from your futures trading account if you make losses. So we're going to transfer some USDT over to our futures trading account here. So I'll press tether, I'll press max. That sends it from our spot account here into our multi-collateral futures. So preview transfer, okay. That's an internal transfer, so it doesn't cost anything, and it's immediate, as you can see. So now we have some assets in our account to trade with. You'll notice that even though I put a small amount from my spot account into the futures trading account, I can actually go ahead and trade with much more value than that. You can see that up here. The reason being is that with futures, we can use leverage. Now, leverage is simply the amount that you can trade with versus how much cash you have to use to margin that position or collateralize that position. So if I have $1,000 on account and I'm using 10x leverage, I can open up a $10,000 trade. The reason it's 10x leverage is because 1,000 margin times 10, that's a $10,000 trade. Now, if I want that $10,000 trade with 2x leverage, that means I have to fund 50% of the trade. 10,000 with 2x leverage, that's 5,000 times 2 to make the 10,000. So leverage is the size of the trade in relation to how much cash you have down to margin that position. So with 10x leverage, I can go ahead and open a trade. If I'm going long, let's say at 99,200, and I have 10x leverage, let's say the total is $100, then obviously I've got $10 down. 10 times 10x leverage makes the $100 trade size, and I've got $10 to fund that position. You can see the estimated liquidation here is 91,000. The reason being, if I open up a trade at 99,000 and it loses, I've only got $10 to fund that loss. And so 91,000 is the loss. Now, if I put this down to, let's say, 2x leverage or something like that, you should see that the estimated liquidation price is much, much lower. The reason being is that I'm funding with cash half of that trade. So the thing can drop 50% before I actually get liquidated because I've got the cash to pay for that potential loss. So leverage, essentially what it does is move up your liquidation point. You have less cash in the position to fund a potential loss. And so you can figure this out with your own stop loss if you want. So let's say I enter a long position here at 99,000 and I want my stop loss to be something like 95,000, right? Well, if my own stop loss is 95,000, I can use 10x leverage without increasing my actual trade risk if I put a stop loss in here, because I'm stopping myself out at 95 and the estimated liquidation of my trade is 91. Liquidation happens when you don't have any more cash to settle the loss, and Kraken will sell out your position, take the cash and settle the loss. And so you don't want that to happen. You might get slightly higher trading fees and everything. There's no point getting liquidated on your assets. You have your stop loss in there to stop yourself out before getting liquidated. So we can open a sample long trade. I'm going to use 10x leverage here, open a $100 trade. Now, when you open on Kraken, you can put your stop loss in right here. So let's say my stop loss is 94,000. You can put that in like this, and you can put a take profit for the order as well if you want to trade short term. You don't have to, you can put that in later as well. So you can see the entry distance is a 5% loss if I take a loss at 94,000. You can see my estimated P&L right here. Let's put like this, actually a bit higher, 105. You can see my estimated profit there if we actually get in and out of the order at these potential prices. So we can go ahead and buy, confirm that, and that puts it into your positions. So you have two conditional orders here. That is the stop loss and the take profit. They're conditional. They're linked to our open order, but they're not trading yet, right? They'll be on the system waiting to be hit and triggered. And then we have, I believe, a position here. And you can see that's our long trade. We've longed BTC, so we're benefiting from the price going up. You can see our opening price and our current price and the current P&L of our position and everything like that. You can close that position as well. You can close an amount of it. If you want to take some profits of 50% of the order, you can do so. Let's just close the whole entire order via a market order, close the perp position, confirm, and that gets you out of the trade. I have some more in-depth guides on trading futures, day trading, some strategies as well. I'll link those below. They're free on YouTube, or you can get the professional strategies that I go through in the Crypto Investor course, with another 300 videos on trading, investing, setting up your portfolio, and I update that for free over time as well. And we've got Discord groups where you can come in and ask me questions as well if you need it. And the links to Kraken and the other exchanges I use and the deposit and trading bonuses will be down in the description as well. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.